Hello, this is a stock market forecast by Itai Leviton at Forex Live. We have here an ascending or rising wedge. Now, it seems that we are breaking it to the downside. I'm looking, of course, at the Nasdaq 100 E-mini futures as a proxy for the entire stock market. And this this futures instrument also encapsulates the Magnificent Seven and a lot of other stocks that have been pushing the market up. So right now, it seems that we are the price is breaking down. This was we had a CPI breakdown, but then we retraced it, and now it seems that the market is again going down, and we will need to see the close of this day. But already for now, even though it might go a little bit up to retest, say to 17,800 or so, then most likely that after that retest, I'm in a 4 hourly time frame now, then we will sellers again will start selling, and it may take either today or Monday. It may I'm looking at 17,525, and later, and the it won't be obviously for today because that move is too big. But I'm also looking at 17,050. That's where this blue line is, and later at 16,850. And we're talking about 5% below the current price. And then I'm looking at the levels of 16,650, 6,500. And later, I'm looking even at 15,550. And I'll soon explain to you what does it mean, why is it later. But that final target, which is a possible target, is 12.5% approximately below the current price. So obviously, if this forecast plays out, for example, let's say we do something like this now, going down later, okay, then going down like this, for example, okay, then if we get to the 17,050 target, then most likely around this area, we're going to find some buyers, people that are going to cover their shorts, etc. Okay, so but this is a stage where I think that stockholders and long-term buying holders, especially those that have huge profits from, for example, even from October of 23. Okay, this where this bottom is. Then the stock market went up 28% from there. Okay, so and if we're looking at bigger time frames, then of course we have the October. Let's go to the where the real dip was on a daily time frame. Then we're talking about. Let's take this away. And let's look at where recently the Nasdaq futures has got to from that low on October 22. And we're talking about, yeah, sorry, that was the 28%. I'm sorry, I was looking at the October 22 is here. Yeah, not the 23. So we're talking about 73%. Okay. The mid-level, by the way, is an interesting also point to remember. That's 13,785. We could even get to there. But right now, it looks like, and you can see also on the daily time frame, this ascending wedge breaking down to the downside is a bearish formation. So the reward versus risk is for the bears that would bet it's continuing to go down. Okay. So, for example, one sort of trade can be, let's say you go in at, you also go in at the current at 17,753, of course, uh, um, not to lose it. But let's say you enter just under 18,000, okay, 17,796, because we are expecting a bit of a retracement. You can put your stop much very low, okay, even at about 0.5%. 0.53%. And then your first target would be just above that 17,005. That's already, uh, why did I go for a long? I needed a short one, sorry. That was a wrong drawing. I'll do a short position. Okay. And so this is approximately already 7 or 8 to 1. Let's say 7.75 to 1 reward versus risk. You can take partial profit there and then go for the other targets that I mentioned. The red line at 16,850 is already at 10 to 1. And then we've got almost a 12 to 1 and all the way down to a 23 to 1. Okay, where obviously you wouldn't write all the position there. You would take partial profits as mentioned, but part of the position could go for that huge reward versus risk. Okay, so the reward versus risk is definitely more interesting now for the bears. Some would even see a possible head and shoulders here. This is the head, this is the right shoulder. Okay, that's also could be a bearish formation. And we just had the PPI report, and previously in the week, the CPI report. Sellers were quite active on these events. So I believe that it's time for the bears to get going. And yeah, by the way, if you want to find the exact uh, retesting, okay, that would be about here. So that would be just over 17,800. Let's say 17,805. Okay. So that would be also an interesting point to look at. Okay. For example, here. And, you could even put some people would go even put their stop for swing traders. They would say, okay, I don't want to get stopped out if price later moves that breaks that wedge to the upside. I'm definitely out of there. 2.16%. If you're not on a leverage trade or doing micro, then it's possible if you're going for uh, the bigger profit, and then you still have a 2.2 to 1 reward versus risk. Okay, some would say, okay, I'm going above this high, it's good enough for me, and I've got a 3 to 1. And some would say, you know what, if I'm going above this high over here, okay, over here is enough for me. This one, it's above these lows. I don't think I'm going to get there. Okay, also maybe this high. Okay, let's take this high over here. Just a bit more spare. Okay, I'm risking still less than 0.5%. Let's put it exactly at 0.5%. Okay, so we see 0.5 appearing over here. That's fine. And I'm still going to that reward versus risk. I'm going to take partial profit at the first target level that I've heard at Forex Live at your consideration. That's a 3.15 to 1. I'm going to take out part of my position, for example, half at 17,525 or so. And then the rest of the position I'm writing for an 8.5 to 1 all the way to the 17,050 mark. Okay, those are sort of things you can look at. Thank you for your attention. Hopefully, this gives you some orientation on some short buys and short trades at your own risk always. And this was the stock market forecast by